let's get started and just kind of run through. The key focus here is really on the world of cryptocurrency, with Bitcoin kind of being at the core, and where we're at right now and all of the amazing things going on. So the first thing to discuss is why crypto in 2024. What is going on right now? What is so important? Why are we at such an important moment? And as we discuss, this year and what's going on in 2024, I thought it would be good to go through some critical points just to give you a little bit of background. So first and foremost, when we talk about Bitcoin, and again, everything kind of starts with Bitcoin. Bitcoin's at the foundation of everything. And when we talk about Bitcoin and this amazing innovation that is Bitcoin, we're talking about the future of money and the future of technology. The way I like to think about it is this incredible innovation that we had back in the end of 2008. It gives me chills even to talk about the story behind this pseudonymous person that put out a white paper. Satoshi Nakamoto, we all know now, is this person. And I can even remember at the time, just shortly thereafter, seeing this paper that he had put out. Nobody knew who he was. But what was so amazing about it, and what continues to be amazing about it, is that when we talk about history of the world and we study history, it's often things that we're studying that we're not connected to anymore. We don't have any connection to them. They're in textbooks. They're not living and breathing. And yet in 2008, somebody who is maybe around, maybe not, maybe it's a group of people, maybe not, but it is within our lifetime, somebody created this incredible innovation. They solved problems with money that push things forward in a way where we could see the interactions. And if we don't know who Satoshi is, we could see who the people, when he first put out this white paper, who interacted with it. Those people are around today. And it's just been an amazing evolution over the past several years to see how Bitcoin has kind of gained its adoption. And, when it comes down to it with money, a lot of things that you can talk about why money is and why money exists and why money works. And really, if you talk about a piece of paper, a dollar or a peso or whatever it is, what is it? It's just a piece of paper. But at the end of the day, if it's backed by a system that makes sense and there's consensus around it, that is really what allows it to be. And so Bitcoin is created, and it's incredibly innovative. And basically the idea is that we can interact peer-to-peer, electronically, digitally, and we don't need third parties to move money. And not only do we not need third parties, a bank or any other third party, to do a transaction, we can do this trustlessly, but we can do it effectively, very economically and cheap. And so to move money in large sums, whatever sums we want, like that, instantaneously, virtually instantaneously, at no fee, or basically no fee, is just dramatically innovative. A lot of people in the developed world can appreciate it, but people in the developing worlds can appreciate the technology. People that are unbanked, that now have access to custody of their own finances, and the freedom that carries with it is incredible. So I'd like to think of it as the future of money and technology. And what we've seen has just been this story that's continued to gain momentum since 2008, and right here in 2024. And some amazing things have happened in 2024. We've had institutional adoption. We've had it in recent years. There have been some pivotal years along the way where institutions have started to take notice. 2018 a little bit, 2021 a little bit, and certainly in 2024, some big head-turning moments as far as the banks starting to pay attention, introduce products, and we're seeing, of course, one of the most incredible mainstream adoption vehicles in 2024 by way of the introduction of the ETFs, the Bitcoin spot ETFs, and then the Ether spot ETFs, of course, that came shortly thereafter. Massive push forward with these steps that we've taken to push Bitcoin out, to allow it to get to the regular public in a way where it's easy for them to access and take on exposure to the underlying asset in traditional ways. And that's a big deal. So we've seen a lot of that, and we've seen the adoption through various institutions. Maybe the biggest name out there that's kind of course, when he talks about the funds, the BlackRocks, and then when we talk about other things, we talk about the micro strategies that have done some incredible things by introducing corporate balance sheet strategies to take on exposure to Bitcoin, and that is proving to be just incredibly profitable and smart, because when you understand the value proposition of a currency where there's only 21 million of them, and there only ever will be 21 million of them, when the system and the network is extremely secure, when you can move money, unlike gold, when you can move it like that, and when the intrinsic value is arguably much more than a gold, because of the way that it rests on this technology that you can enable the facilitation of transfer of money so quickly, it becomes very attractive. And of course, a warmer regulatory climate, perhaps today more than ever, and specifically today in the aftermath of the election in the United States that we just saw. As far as crypto goes, this is a very big development. When we were looking at the analysis heading in, ultimately, in the medium and longer term, the election wasn't going to make a difference, in our opinion. President Trump had already in his campaign been exceptionally warm and friendly towards crypto. And that kind of set the stage and put pressure on the Democratic Party and the Harris campaign to then warm up. And so we were already seeing that no matter what, but the outcome, which it looks like, which is a red sweep, where the Republicans are going to have control of the Senate and the House, with Donald Trump as the president. And given his promises and his campaign and his kind of just warmth towards crypto, it should be a very exciting time in seeing where we're at. So we're basically in the best possible regulatory environment that we can be in. Of course, everything kind of runs through the U.S. People look at the U.S. for regulation as a leader in terms of the capital markets and the sophistication and how things run in the US. And so a very big deal to see the embrace of cryptocurrencies in the United States, what we believe will happen now and accelerate given this Trump presidency. So very excited to see things move forward. So 2024, really big year with the ETFs, and now with this warm regulatory environment and the institutional adoption. So we're setting the stage for what should be very exciting time going forward. I think we're still very early. As far as 2024 performance and perspective, I did this the other day, this chart. It's maybe changed even a little bit more, but the purpose and the takeaway of the chart is here. When you look at performance in 2024, one of the things that you think of if you're looking at traditional markets and you're not thinking about cryptocurrencies is you're thinking gold, you're thinking the S&P 500, you're thinking equities, you're thinking gold performance, and you're thinking record highs in these markets. We've seen record highs in gold. We've seen record highs in the S&P 500. And that is kind of the standard by which many people are thinking, wow, like these markets are on a tear and they're making record highs. And yet, when you put it in perspective in the context of where Bitcoin is and Bitcoin performance, all of a sudden it's quite shocking. And you can see that the point here is that Bitcoin is significantly outperforming, even with gold and the S&P 500 at record highs. Bitcoin has just made its own record high. Again, it earlier made a record high, taking out the 21 record high earlier in March, and it did it again the other day. And it is more than doubling performance in gold, which has been on fire. So it just gives you some perspective. If we look at performance since inception in Bitcoin, Bitcoin has been just an outperformer across the board year over year. This does play into the economics, and we believe it will continue to play in given the supply-demand economics of Bitcoin, which makes it an incredibly attractive asset for portfolio diversification. If we look at historical performance now that we're in the fourth quarter, just to give you some perspective, here's historical performance in Bitcoin across on a quarterly basis. My head is in the way here a little bit. I can move it out of the way. But if we look at quarterly performance here from 2013 to present, well, we can see at the bottom in the gray is the average returns. And if we look at this, it's quite staggering when you look at Q4 performance. And what it's telling us is that Q4 performance for Bitcoin over the months of October, November, and December has just been outstanding. It has been by far the best quarter when it comes to performance. We're, of course, just starting out November. We came out of a very solid double-digit September performance again. Average performance in September was about 20% plus. We were, I believe, around 12%, so a little bit less than the average, but still the double-digit returns. But on a quarterly basis, Q4 returns are in excess of 80%. Since 2013, 80%. So a lot of strength in the fourth quarter, and we still have a ways to go. We're not even halfway through the fourth quarter. And as you can see, or as you might notice, Bitcoin's been doing well as we get going in this start of November. And I think it's an important takeaway to understand when you look at seasonality and trends, that it's important to understand how certain markets behave at various times of year. Now, I want to go over and give you a little bit of a look at the technical picture here, just to explain where we're at right now and where I think we could be headed. So here is a chart of Bitcoin performance over the past several weeks, months. This is going back to March, the yellow shaded area there. And that is showing a consolidation. And the consolidation from March was roughly between $50,000 and $75,000. What's interesting about that, and the way technical analysis works, is that when a market eventually does break out of a consolidation, it likes to move in a move equal in size to what the previous consolidation was. In this case, because we had a consolidation roughly between 50,000 and 75,000 between March and up until the other day, the breakout that we had finally seen the other day above the record high, which was just over 74,000, now projects a $25,000 move to the top side. It's amazing that that happens to also coincide with 25,000 plus the 75 is that massive milestone, that massive, much talked about psychological barrier at 100,000. And so I think that now the stage is set after we just made that move, and then coupled with what we just talked about, fourth quarter performance, how strong it's been, that we could really see a run that takes us up towards 100,000 between now and into year end. Of course, we don't know what's going to happen, but if we accept that Bitcoin is here to stay, if we accept that the supply of Bitcoin is going to always be 21 million, if we accept that this is going to continue to grow and gain adoption, then more adoption, right? More demand, same supply, it obviously translates to what you would think is upside pressure on the price, which is what this is designed to be, in my opinion, as a store of value asset. And so I think it's an exciting time for Bitcoin. And if we consider where we're at right now and where we're going, I think that we're still very early. I think that when you think about Bitcoin, and I've been saying this for many years now, even back, I was at the Bitcoin conference in 21 on stage, and I talked about, Bitcoin before 100,000 and after 100,000. And it's kind of how I see it. And so we're still very early. I think the potential here is for seven-figure big Bitcoin in the years ahead. And again, very excited to see how things play out. As far as volatility goes, I think it's another thing to talk about, and something that we can end off with today, but it's something to understand. When you look at financial markets and you're trading financial markets on a day-to-day basis, one of the most undervalued and underappreciated indicators out there, in my opinion, is ATR, average true range. I think that most people, when they're trading markets, they don't have an idea of what a daily range is in a market, and it can often trip them up when they're trading and they're trying to position. Now, it just so happens that, in my view, and perhaps somewhat ironically, given that this is such an emerging new asset class, my view has been more to buy and hold. I think to see this as an investment and a technology play and a future of finance and money play. And so with this, it's more of a buy and hold. But nevertheless, and this is relative to my experience for many years trading foreign currency FX and looking at those markets and seeing the volatility there. But a couple of things as far as volatility goes, one of the critiques over the years against Bitcoin, despite the returns, is the volatility. I always like to address that by saying that indeed there has been quite a bit of volatility in Bitcoin, but if you look at the trend, it's moving down over the years. So the volatility is coming in. The other thing that's important to understand about that is if you believe in Bitcoin, the volatility that you have is actually a great opportunity if you understand where Bitcoin's going. The more a market matures, the less volatility there is, which means there's more certainty around it, which means that there's less opportunity. So right now we're talking about always when it comes to opportunities in markets, we talk about a disconnect between price and value and trying to kind of find that disconnect and trying to take advantage of it. And I think that there's still quite a disconnect between price and value right now. And that kind of manifests through more volatility. But having said that, volatility is moving in the right direction in terms of giving us confirmation that this asset class is being adopted and we're moving towards more certainty. And so that's reassuring. Now, as far as Bitcoin average daily ranges right now go, just so you know, it's bumped up a little bit since the other day, but we're over $2,000 a day in Bitcoin range. It's important to understand because if you're trading the euro or you're trading the peso or you're trading the yen, you want to know what the average range a day is so that you have an idea not to panic if you see excessive moves. You wouldn't want to see certain aggressive moves that you see in Bitcoin necessarily in another market. But if you put in perspective and you understand what the average daily range is, then it kind of gives you an idea of how to perhaps position and understand the market a little bit better. So with that said, just for your own interest and insight and kind of takeaway here, it's good to look at ATR. I usually look at a default ATR on a daily chart. So this is based on a daily range. And right now it's actually a little bit higher as of this morning. But the other day when I did this, the average daily range in Bitcoin was $2,100 and Ether was about $100. We've moved up a little bit. But again, an important thing to understand when you're looking at a market to have a good appreciation for what the ranges are. So with that, Ali, that about sums it up for this overview today. I hope that everybody kind of was able to tune in and enjoy a little bit, and I wasn't overwhelming. Ali, I'll leave it to you to see if there's any Q&A.
Thank you, Joel. Incredible information. I hope everyone had their notebooks filled out. Now it's time for some questions. The people in the public can send us some questions if you have for Joel to answer. This is the opportunity. In the meantime, I have two questions.
Sure.
The first one would be, you mentioned is that you see a promising future for Bitcoin. What would you recommend or say to somebody who's hesitating or is trying to start with trading with it?
Yeah, so when people are getting into this space, the first thing I recommend is a lot of them actually kind of see the returns outside of Bitcoin. Bitcoin has become almost the conservative asset, and so they want to have exposure to ETH. They want to have exposure to other tokens on Ethereum or on other blockchains, other cryptocurrencies that are exceptionally more volatile, that are showing perhaps more extreme returns. And my first recommendation is always to lean to the conservative side and to say, if you're going to come in, start with Bitcoin. Now, if it's somebody who's not even thinking about that, Ali, and they're just saying, I'm scared of Bitcoin, then my recommendation is always, like with anything in life, is to just dip in. You do not have to take on a big position. The best way to learn anything in life is to kind of have real world experience with it. And it's actually really important, if you haven't been in this world, to see how it works and to see why it's so amazing and why it's so exciting. So to set up a Bitcoin wallet, to be able to kind of open an account with one of the exchanges, maybe to go to a decentralized exchange, to custody your own funds, to have to go through these steps. And now the education is so great out there that it's easy enough to kind of go through those steps. And to have Bitcoin sitting in a wallet and just this idea that I have Bitcoin now, it's in a wallet that I have a private key to, effectively my own bank account, vault that I have access to. And that if I want to send you, Ali, money, that you can send me your public key and I can just shoot over, copy and paste it and send it to you. And within seconds, you already have the funds. It's just really exciting to see how we don't need third parties and we can move money. So my recommendation to somebody who's just getting in is just to stick your, dip your toe in the water and just take a slow step to getting comfortable and learning about it, and don't listen to what other people are saying. And you always in life need to be comfortable in your own skin, and have that confidence. And so dip in, take on a little bit that you can, and then as you get comfortable and you kind of see for yourself, then maybe look to increase your exposure.
Amazing. Thank you so much. And the second is, now you're mentioning volatility. We often see in our social media and our channels, some people comment some their fear about volatility. What would you recommend to be able to manage these emotions and be able to be objective while trading with cryptocurrencies?
Yeah, so this applies really to anything. And I'll give you my two risk management rules when it comes to trading that apply to any market that you're looking at. And as far as your concerns about volatility, and they're simple and they sound kind of funny, but they actually act as uh, amazing risk management tools. So I'm going to say them, Ali, and you're going to laugh. But the first rule that I have when you're in financial markets and you're thinking about trading financial markets is anytime you take a position, you must only love the position, meaning nothing less. You cannot like a position. And the reason that you cannot like a position is that everybody, everywhere in the world that we live in today has access to trade at the tip of a finger with a little button on a click on a phone. And there isn't going to be a day or a minute that goes by, Ali, that you don't like something. We always like something, right? It's easy to say, I like that. But what happens if you like something and you take it is that when it doesn't work out, you say, why did I take that? I only liked it. I didn't love it, right? And so if you really love something, that already acts as a kind of wonderful risk management tool to say, I don't like this. And it eliminates you kind of taking unnecessary positions. To love something is to really have a lot of passion behind it, which means that you are fully convinced and committed to this idea, so that if it does not work out, and I always like to think of downside first, you won't have any regrets and you'll be confident, because not every trade is going to work out. But at least in this situation where you took something that you loved and it didn't work out, Ali, you'll look back and you'll say, there's nothing I could do. I loved it. I gave it everything I got, and I'm ready for the next one because I did everything I could. Most people fall into the trap when they trade is it's just a psychological game, and you need to protect yourself as much as possible from making mistakes. And one little mistake can snowball, as we all know, into some awful self-destruction. So the first rule is to love your trade. The second rule, which maybe speaks a little bit more to the point of volatility and being afraid of taking positions that are too big, is what I call the pillow test. Simple as that. If you have a pillow, you go to bed at night and you put your head down on that pillow to go to sleep. If you find that when you put your head down, you can't sleep and you're thinking about the position, Ali, then you fail the pillow test and your position size is too big. It's as simple as that. Everybody likes to read textbooks and go through all these quantitative analyses and to find out how much and how big I should do. My portfolio should be 2 times leverage, 5 times leverage. I should never risk more than 1% of equity, 2%. It's all nonsense, in my opinion. The best gauge for you, because everybody has different risk tolerances. If you can go to bed at night and you can put your head down and not think about that position, then you're appropriately positioned. If you go to bed at night and you can't sleep and you're tossing and turning, you fail the pillow test, then you need to reduce your position size until you get to a place where you can sleep at night.
That's amazing. Thank you, Joel. I think
Pleasure.
our public was speechless because we have no question from the
If
public.
anybody out there has a question, please don't be shy, because I'm shy, and it's great if you want to type something in. There are no bad questions, so I am happy to take any questions about anything. And you know what? I might not even know the answer. Probably won't. But I'm happy to take some questions if you have any, if you're thinking about, and then feel free. I guess we'll hang out for another minute or so if somebody wants to type a question through, and then we'll wait. Otherwise, it's really good to be here. I enjoy doing this. And I think there's a lot of, for me, Ali, while we're waiting to see if anybody has any questions, I'll just say that I love financial markets. Not only am I in them kind of on the analysis and on the research side, but I'm in them and I got into them because I want to make money. right? So I am committed to the two together. I believe in that it's not purely academic with me. It's something that I believe in, and it's something that I think that there's tremendous opportunity to improve your quality of life. If you don't even have to be smart. You just have to be disciplined, and you just have to have respect that. And if you can do that, then there's so many amazing things going on. And with cryptocurrency, it's just been a whole other world for me after enjoying my life trading currencies for so many years and kind of being working in strategy and currencies. What an opportunity, once in a lifetime, to be living in this time where there's this whole new birth of these new types of currencies, that are really pressing kind of the possibilities in terms of where we're going in the future. So I'm very grateful to be living in financial markets at this time and learning and benefiting from it, and very happy and blessed to be here in a position to be able to share these insights and hopefully to help people, with the ends of we're all here to learn, and we're all here hopefully also because we're looking for opportunities to improve our financial situation.
Thank you, Joe. We have
Yeah.
some questions. Okay, so the first one, it's what are your thoughts in prop firm trading on crypto?
Okay. So I would ask for a little bit more clarity, but I'm going to assume that they mean if what are my thoughts about somebody who wants to go trade for a prop firm, and for the purposes of anybody who doesn't understand, a proprietary trading firm where you're going somewhere and somebody's giving you their capital so that you can trade. And you don't assume the financial risk, and you benefit on a partnership with the person providing the capital, and effectively you trade for the firm and the fund's money, and you take some form of a return. The value proposition on the surface sounds great. I mean, you have an opportunity to go somewhere where you can not take on your own risk. And you can learn, and you don't have any downside risk other than if it doesn't work out, then you're out of luck and you have to find another opportunity. So in that sense, it's good. But it also is something that a lot of people don't think about, is that I think that in an ideal world, in financial markets and trading, in the most ideal world, we have enough capital where we don't need to go trade for a prop firm. And the reason I say that is because the second that and it really depends on the person, but the second that you're responsible for somebody else's funds, there is an element of pressure and stress associated with that can have a significant impact, and perhaps and quite often detrimental impact on your own kind of way of thinking and trading. And so it's possible that you are prop trading for a firm and you're doing okay. And then the firm says, well, they want to put their capital to work, and you're taking too small position sizes for them, and they want to throw more money at you. But that puts you in a position where you're taking on maybe too much risk or more than you would like, and that might compromise your ability to kind of see the markets objectively and in the best possible way. And again, like we said, the psychology of trading is so important, and there's such a fragility there that it's important that you have kind of a 100% focus when you trade without kind of having any negative outside variables. And so when you throw yourself into a situation where you're trading with a prop firm, it's easy to kind of look past these things because right away you say, wow, I don't have to trade my own capital. But there are kind of risks associated with that you need to be mindful of. And the most important takeaway there is not that you shouldn't do it, and perhaps not that it might not work out, but that if it doesn't work out, that you shouldn't be discouraged, because if it doesn't work out, it might not necessarily be that you don't know how to trade. It just might be that there were external factors and pressures that put you in a situation where you weren't able to succeed.
Thank you, Joe. We have another question. What's the maximum leverage? We offer 1/500 for cryptocurrencies. There's another question. I would like to mention that we don't give financial advice, but I'm pretty sure Joe will answer regarding his experience. There's another question. It says, for a retail trader, what would you recommend is the safe trade size?
Yeah, so just again, it goes back to the pillow test. It really does. Um, you know, uh, Leverage can be great, and there can be opportunities for you to kind of take a bigger position size, but it's something that can be very dangerous. And so like I said before, I'm not going to define what appropriate percentage of risk on a position is. It depends on, kind of where your exit is or your entry is, where you might want to get out of the position. So I think that the simplest way to address this is just through the pillow test. And again, it's if you can take on, what you want to do is what I think is very important when you take a position is before you take that position, before you click the button to take that position, you need to immediately know what kind of a trader you are for that position. Are you a short-term trader in this position, or are you a long-term trader? You need to define that, because the biggest thing that happens to a lot of people is they get into a short-term trade, and then the next thing you know, they're in a long-term trade, right? And that's not what you want it to be. Or the opposite. You plan on being in a long-term trade, you see a little bit of money and you take profit, and then you're out, and you were just telling your buddies the day before that you're in this trade over the next 3 months, and now you're out of it after 2 minutes. So I think it's important to know what type of a trader you are. And then I think it's important to identify, to the person that's asking, forget about the position size, right? Forget about that and forget about the money. Just identify where you would exit from a price standpoint if the trade doesn't work out. You need to know, if it's not going to work out, where that is on the chart, right? Where is that exit point? Once you determine where that exit point is, then you can kind of backtrack into it and say, okay, I'm entering here. This is where I would get out. If it moves against me this much, it's X%, and that can translate to how much I can take. If that X% is 3%, which translates to, $300, then, and I'm fine with that, then great. If I feel like that 3% can be, $3,000 and I have no problem, then I can leverage myself at 10 times. So it really just depends on what I'm comfortable with and what I can put my head down on that pillow with and go to sleep. You need to sleep. I'm not saying you need a lot of sleep, but you need to be able to get some rest. And more importantly, you need to be able to separate a little bit. And your mind needs to have some peace so that you can be healthy when you come back to market. So the simple answer, again, is the pillow test. If you can sleep and you have a little bit of a larger position size, then you're fine, in my opinion.
Thank you, Joe. I hope that answered the question. I would like to also mention something. Si hay alguna persona hablando español que le gustaría mandar una pregunta en español, también pueden, y va a ser traducido a Joel en inglés para que puedan tener su respuesta. There's another question from Amir. I want to do spot trading on crypto where I buy small amount of foreign currency for Bitcoin. If price goes against me, then I will need to pay additional money, going to negative balance. Would you recommend leverage when opening an account in an exchange and trading?
Again, I would recommend leverage if you feel it's something that you have the ability to kind of risk and understand. The worst thing that you can do, Amir, is take a position that you want to see through, right? So again, it comes down to, what is, Amir, you're looking at the position, you're looking at what you want, and you're looking at where your exit is, where it's not working out before you get in, right? And so you're going to determine where that is. And if you determine, like, again, let's say the exit is, 3% away from where the market is, or 5% away, then you just need to be able to determine how much money, right, you want to allocate towards that. And so if it means that you can take a leveraged position and risk, a certain amount of money that's a little bit beyond what you want to allocate as far as the actual dollars and cents that you're putting into the account. And it can kind of be enough to be able to account for that move in the market, that 3% move, where you don't have to put the whole amount in, and you're using the leverage in that way, then great. And if you, again, Amir, if you can go to bed at night with that position, then that's fine. It's obviously the purest and clearest and best way to trade a market, and the best way for you to be able to determine and to see who you are as a trader the most, and the healthiest way is unleveraged, right? The healthiest way to trade is to be able to say, I'm taking a position, I have a certain amount of money in the account, this is what I have, I can't lose more than that. and I'm going to take this position, and the market can move up and down as much as it wants, and it's fine because I'm completely unleveraged. And that allows you just to think about the idea, which is really at the core of everything. But again, if you feel like you see that the market, isn't going to move more than 3 or 4% or 5% or 10%, right? Then you can effectively deposit what you would need to account for that 10% move. Of course, accounting for the daily rollover and the carry and the charges on the interest, right? Because you have to account for that. But if you account for that, and then you take the position using leverage, and you can sleep at night knowing that capital at risk is for that position, then that leverage is fine. So I hope that helps answer the question.
Thank you, Joe. I think for now we don't have more questions. I hope everybody of you have found many answers. Thank you, Joe, for these great contributions about cryptocurrencies. We invite you to explore the crypto page on our website, Black Bull Markets, where you'll find over 30 cryptocurrency pairs available for trading, or CFDs allow you to trade cryptocurrency without needing to own or manage the underlying assets, and enjoy leverage up to 1 to 100, lightning fast execution and tight spreads on 11 major cryptocurrencies. Additionally, we encourage you to visit our social media channels, blogs, and articles where Black Bull Markets and LMAX Group keep you informed with the latest market news and important updates. Joel, would you like to invite our public to visit your pages, your media?
Yeah, no, I again, I work as a currency strategist for LMAX Group. I'm here representing LMAX Group, and so you can find research that we put out on the LMAX Group sites. I put out a product, a global daily FX insights covering foreign exchange. I also put out a cryptocurrency report, and you may or may not find me on social media, on my own personal X account, Twitter X account, where I advise you to follow me at your own risk. If you do happen to find me and you see a green looking zombie, that's a whole other world though. So you may not be ready for that yet. So, but no, thank you very much, Ali. I appreciate that.
Thank you, Joel, for preparing this valuable webinar, and thank you for our community for attending today. We appreciate your time and participation. Thank you so much.
Okay, bye everybody. See you next time.